How's everyone doing?
Wow.
Everyone like their lunch? Everyone fully enthralled? We promise, these gentlemen here said that they will do a dance performance for you on demand.
That was not rehearsed.
Okay, so not as exciting as a dance performance, but we're here to talk to you a little bit about the expansion of Chinese companies out into the global gaming ecosystem. And we think that there is a lot of opportunity for Chinese companies to expand in their capital markets and also the acquisition of content, the acquisition of technologies. The Chinese game companies do a great job with distribution through mechanisms such as WeChat or any number of ways that they have expanded the use of free-to-play games, digital distribution of games. But one thing that they've usually acquired is content and new technologies. And so we think that that's something that will continue to happen. Niko Partners is the market research firm that I founded 15 years ago, has focused on the Chinese and Southeast Asian games market for all those years. And today we released a new report, the China Games Market Data Report. And let me tell you that by our estimates, for 2017, the domestic revenue in China will be $26 billion for PC online and mobile games combined, with 600 million gamers. And if we think about $26 billion in revenue, these Chinese companies have a lot of money that they can use to expand around the world. So my esteemed panelists here are going to help answer some questions for you about what that means. So first, let's see. I'm going to direct my first question at James. We've got Jazy, and JY, by the way, here.
Good luck, you guys.
So James, how do you see the next 2 to 3 years for Chinese game companies looking to expand into global markets? And what do Chinese game companies or investors look for when shopping for acquisitions overseas or even in China?
So we also saw a lot of activity in M&A from Chinese companies coming into U.S. market, and that's going to continue in the next 2 to 3 years. It's going to come in 3 ways. One is merger acquisitions. And if you're one of the tech giants like Tencent, like Giant, you're buying big companies. You're buying Supercell. You're buying Playtika for $4 billion. Traditionally, there have been a few larger acquisitions that were landmark and did really well for them. So Perfect World acquiring Cryptic, Tencent buying Riot Games. There's also some that are in the next tier down, like Sanqi Wang, 37, or Lion Kong. There's companies like Shine Zone, Joy Me Capital, which is an extension of Youku. They're also shopping. So the typical things they tend to look for is, if you're the larger company, you're looking for profit. You know, at least $1 million profit will get you a lot of phone calls. If you're on the smaller side, you saw companies like iDreamSky acquiring Rumble Entertainment. They're looking for IP and great teams to expand the ecosystem. Okay? So the second way I talked about is kind of the homegrown approach. It's been challenging, but a few companies have been successful at doing that. So you look at a company like IGG, based out of Fremont. They got about 45 people, headed by Kevin Zhu. They've quietly made a great business, a Chinese company. And then there's a lot of other companies like CSUN Entertainment. They have an office at Redwood Shores now. You guys heard about NetEase America. Sometimes these are offices that are extension of the Chinese company, and then sometimes they're here to do R&D and try to look for new investment deals. And the third way that they're going to enter into U.S. market is going to be on the investment side. So again, I mentioned CSUN. They made an investment into Magic Fuel for $2 million. I want to say NetEase invested into a company called Reforged, a bunch of ex-Blizzard and Riot guys. And TalkWeb is a Chinese company invested in us. And specifically, they were looking to connect with more Western companies. So those are the 3 ways that we see.
Okay, thank you. And Jim, do you have anything?
Yeah, I was going to say, to add on to that, if you break it down into the 3, I think one that you haven't seen that much of until the last year or 2 has been on the acquisition side. Right, so you have companies like Perfect World and Tencent have been pretty early on in making early investments into gaming companies, but it's only been in the last year or 2 when you really start seeing these aggressive acquisitions. And there's a couple of driving factors that, of course, there's the fact that China's gaming market is at this point the largest gaming market in the world. You do have all these companies that are generating high profits, so they want to put some of that money to work. But also because these companies are seeing such high valuations out of China, sometimes they have P multiples of 30, 40, 50, which is significantly higher what they could get in the West. And so they're able to raise money much more easily also. And so for them, if they're able to make acquisitions for profitable assets overseas, they're able to fold those profits into their parent company, and they see a big stock price jump. Right? So for a variety of factors, strategic expansion, tapped out in the local markets, profitability in local markets, it's easy to raise money for them. It kind of is the perfect storm for why you see so much acquisition coming out of China. And it's not just in gaming. It's also ad tech. It's also real estate. And I think right now you're still seeing very high valuations in China. Until that readjusts, or if it does readjust, I think you're going to continue to see waves of acquisition.
I just wanted to give you a specific example. The company that I used to work for, Giant Interactive, was successfully delisted from New York Stock Exchange in July 2015 at the valuation of $3 billion. And today, Giant's valuation in China, Asia market, is at $18 billion with a rich valuation. And,
and it's a cruise line. It's the Century Cruise Line.
So they went through a backdoor listing to be relisted on A-share. And so that way is to accelerate the relisting process. And they quickly had a huge adjustment in their valuation market cap. So the company definitely is richer, and it's easier for them to raise money and be able to buy other game companies in China or outside of China.
Yeah, that's a significant jump. $3 billion?
$3 billion.
$3 billion to $18 billion. I mean, you have with that much more money to spend, you can acquire all of these areas that would be competitive then, or might have been something that held you back against your competition.
Yeah, actually, to touch upon that a little bit. So, people might ask why that may be the case. I think one element is that historically it's been much more difficult to IPO in China. So you need 3 years of profits in order to list. There's more of a pipeline or a queue in order to IPO, whereas in the US, you could submit to IPO, and if you meet certain guidelines, you can do it, whereas in China, there's only an approval process. So that does limit the number of public companies there, limited supply, increasing demand with increasing wealth, and so that helps to drive up the valuations you see over there.
And relatively speaking, it's easier for Chinese game companies to be listed because most of them, if not 100%, are profitable because game companies are usually very profitable. And yet I think last decade you've seen Chinese game companies seeking for IPO listing in US, but I think in the recent 3 to 5 years, more and more Chinese game companies, instead they turn back to the domestic stock market, seeking for a listing. I think I'll give you one example, KingNet. KingNet actually was in the process of a US IPO back then. I think this was maybe 4 years ago. And they realized that the stock market in US is not favorable in terms of valuation. So they actually reversed their offshore structure, and then instead they went for a share listing. And they are one of the most successful domestic game companies to be listed in China.
Yeah, it's definitely interesting because there is a notable difference in perception within China and Western markets for gaming companies, right? So whether it's because folks have been burned by, let's say, Zynga going IPO, or other, examples like that. In China, because so many of these gaming companies are profitable, and at the end of the day, Tencent, if you look at where most of their revenue coming from, is gaming. Right, so I think from an investor standpoint, people are a lot more bullish and willing to invest in a gaming company, both from a private sector and public sector, as opposed to in Western markets where it has come in waves. So when Facebook gaming was big, you had a lot of VCs jumping into gaming, mobile gaming that had that wave also. Whereas over in China, I think there's been a more steady level of investment, both from the early stage and from consumers.
Well, I think one of the reasons for that is the importance of digital games in China in terms of the primary source of affordable entertainment. And so you see that there are 600 million people, 600 million, just let that sit in there are 320 million people in the United States total, and 600 million people in China are playing digital games. So the importance of gaming there is such that it really not only creates an ocean that can rise up with opportunity for companies to take a piece of that action for those 600 million people, but it also it means that there is like this prestige if you are a game company or if you work for a game company, and you're serving the need of people who want to have affordable entertainment. And this is one of the ways that they are doing it. Speaking of Tencent, that is definitely the biggest company, I think the biggest game company in the world, and also the biggest game company in China. They have about $10 billion in revenue just from game services alone, excluding any of their other lines of business. And by our estimate of the market, Tencent makes up 30% of the PC online game market, 46% of the PC online game market controlled by public companies. And for mobile, they have 43% of the market, or 48.7% among the public companies. And so those are significant shares. NetEase, which was pretty much non-existent for mobile games fairly recently, has had a fast ascent and now is, I think, 22% of the total mobile market. So if you add Tencent and NetEase together, you get 65% of the total market is attributed to those two companies. And so mobile game developers who are looking to enter the Chinese market have a lot of options, but those two have a lot of the market sewn up. So it's something to consider. But at the same time, we need to then look at what they're doing with all of their money. So my next question that I'm going to start with for Jazy, what do you think about this? I consider it more of like a silent march that Tencent and some of the other Chinese companies are doing to quietly buy foreign companies. And I know that Jim would argue with me that it's not so like a determined silent march, but really there could be a lot more splash and fanfare. They could put the name Tencent. I mean, my friends in Los Gatos don't know the name Tencent. You can put the name Tencent anywhere in the world you want to with that much money, but they're not doing it. They're just coming along and buying things rather quietly. So what do you think about that technique, and what's going on there?
Well, Tencent is such an amazing company. If you remember back then when Tencent IPO'd in Hong Kong, at the IPO price compared to the most recent market cap is at $270 billion. It's just
phenomenal.
Staggering.
Phenomenal. It's unbelievable. I want to see a show of hands here. Like, how many of you actually know WeChat? Oh, wow.
How many use
spreading.
WeChat? Do you use it, or you just know it? You use it. That's pretty good, actually. I
can't remember a single day that I would go by without looking at WeChat.
Yeah.
For people like us, we do business with China, it's a must.
Yeah.
I tell you, this is a secret. It's no longer a secret now. I am probably the only person working in China without a QQ account. Mm-hmm. Actually, I resisted. And eventually, when WeChat came out in 2011-ish, I think, I eventually set up a WeChat account because I get my boss stopped calling me, stopped sending me text messages. Instead, everything went through WeChat. It's text message, it's like a video phone call, audio phone call, or audio messages, everything through WeChat. Like, if you don't have a WeChat, like I couldn't even work and live in China. Mm-hmm. And WeChat has was a monthly active user, mm-hmm. 800 million. Mm-hmm. 800 million. It's just amazing.
Well, just to jump in for a second, Lisa, you're asking about the silent march, and yeah, if you're in the games, you know what Tencent's doing, and I think everyone in this room knows that the Supercell acquisition is, one of the biggest in history, $10 billion acquisition. Tencent's actually a client of ours, and I don't know if there's anybody from Tencent's in the audience, but on the gaming side, you guys have heard of King of Glory? That's one of the #1 mobile games in the world. So it's recent reports are 10 million DAUs to play this game. It's basically League of Legends for mobile. And we had Tencent in our office, they're a client of ours, and that's actually coming here. It's coming here under the name of Strike of Kings. I don't know if who's heard of the word Strike of Kings, you should look it up. They also signed the DC license. So Strike of Kings, you're gonna see a bunch of fantasy characters fighting, and you see Batman in there. Yeah, and then I wonder if my panelists here think if that's going to be successful.
I'm very excited about, discussing Tencent's global expansion, the quiet acquisitions with you guys. I just don't know what's next. I mean, Tencent is already the world #1 game company. And after the acquisition of Supercell, like what's next in the game world, literally? I mean, they own, let's have a countdown. Let's see, recap what they have acquired. So they actually started with a very successful acquisition of Riot Games, 51% initial acquisition, and then with, if certain conditions were met, and they eventually, in 2015, they bought the rest of the company. So that now Riot Games is the wholly owned subsidiary of Tencent. And then after that, 2012, they acquired 40% shares in Epic Games. Between 2014 and 15, they acquired shares in Activision Blizzard, Glue Mobile, and Pocket Games, those two San Francisco-based companies. And 2016, it's a mega purchase, Supercell, for $8.9 billion. They acquired 84% from its previous owner, SoftBank. Actually, Giant participated in that bid. And obviously, Tencent paid a much higher premium.
So I think, the fact that they've done all these deals, and as we mentioned before, there's a much higher perceived value for gaming content in China and Asia as a whole versus Western markets. If you look at one of the key distinctions between these largest companies in China versus in the West, like in the West, when people, they look at Facebook, you look at Google, you look at Apple, they all make a very concerted effort to be neutral third-party players. They view themselves as, all right, we're the hardware, we're the app store that all these content creators play in. But over in China, you have, Tencent, who's the distribution, the platform, but they have first-party games which generate the vast majority of their revenue. So this distinction in where they think they play and where they're willing to make their money, I think is one of the key drivers why they're out there acquiring content and investing in developers and acquiring profitable games, because they view themselves essentially ultimately as gaming companies, and that's the way they're generating their revenue. I think it'd be very interesting if one of the Western platform companies recognize that, hey, at the end of the day, everyone knows that Apple generates a lot of gaming revenue, right? But if one of these big, and Facebook, same thing, whether it's advertising or games on Facebook, which isn't as big as it used to be, but if one of these platform companies did go into first-party games and try to capture some of that market themselves.
Okay, Jim, I'd like to ask you another question, though, along these lines. It's a little bit different, but what do you think some of the key differences are doing deals in China versus the Western market?
So I think we've touched upon some of these already. So clearly, you see these deals happening because, one, the valuations are higher, right? So from a financial standpoint, that's one of the drivers. But then there's also, who's making these acquisitions. In Western markets, when a Western gaming company is acquired, it's typically by another gaming company, an EA, Activision, and so forth. Whereas over in Asia, in particular China, these lines are much more blurred, right? Just like Tencent, they're a platform company, they're a ad network, they're a first-party content developer. The companies that are going to be interested in a gaming company are also across the board, right? So when we take a gaming company over to China to talk to potential buyers, it's not just gaming companies, it's platform companies, it's ad networks, because they view themselves as an overall ecosystem where maybe they control part of the distribution, but they also need games or some other method of monetization. Right?
Okay.
So I think another element is from a decision-making standpoint. Many of the acquirers, even though they're public companies, even though they have $1 billion in valuation, the founders are still around. And in many times, they're the chairman, they're the CEO, they're still the key decision maker. Right? So a lot of it is about having that relationship with the key decision maker and then getting them on board, because once you have them on board, the deal will basically get done.
Okay. Anybody else want to?
Yeah, that Jim's, I want to look for ways to disagree with Jim, but I actually totally agree with him. From when we were we've successfully raised money in US, China, and in Europe, and it's all very different. Europe is very older money. I think in Silicon Valley, it's really, the VCs, and it's very strict due diligence. In China, even more so than US and Europe, I found it to be very relationship-based. And one of the things I want to highlight what Jim was saying about the decision making. If you talk to a VP or SVP here of a sizable company, it means something. I'm head of merger acquisitions. It means something. In China, if you're not talking to the CEO or the chairman, it's they're really the ones that hold the power. I'll give you one small example. A good friend of ours runs Kingsoft's game business in Beijing. They recently sold 10% of their company for $140 million to Tencent. Anyways, he runs this whole company of 300 people. I asked him how many direct reports he has. He has 50 direct reports. I have 7, and I'm like super busy. He has 50 direct reports. And so, of course, anything that happens in his company has to go through him, or it doesn't really count.
And it's not easy to meet the key decision maker the first time.
Get their WeChat.
It really involves a lot of personal time, FaceTime, meetings, and dining, wining, and eventually you get to see the chairman.
And I think from our experience bringing Western game companies over to China to try to find a partnership for them so they can distribute their games in China, it's really a title-to-title kind of meeting. So if you expect to meet the decision maker, you better be the decision maker from your company. I can't get you a meeting with the CEO if the CEO doesn't come. So we've done this for a long time now, and when we set up meetings and for partnership or some sort of distribution deal, I say very plainly, if you're willing to send your CEO, I'm willing to go help you get the right meeting there. And usually that works out. So it's the ones that they try so hard to go senior manager to senior manager. Nothing against senior managers. It just is not going to get the job done in this particular situation. I think we're going to skip to this one about how does the esports market in China compare with the US and Western market, and how is the VR market in China? How about the VR market in China? What do you think about VR and esports as drivers for the game industry? And what do you think about these as buzzwords for investors from China or also into China in 2017 and 18? And I think James will start with you.
Okay, several topics there. I think each is probably
I know. But there's a sort of new kind of buzzword, and see how they're going and see the differences with that market.
Yeah, okay, looking at esports first, the difference between US and China market. Number one is China is heavily regulated by the government and US is not. What that means for those of us in esports is you're going to have a much harder time going into China than a Chinese company coming into US. Second, Tencent is really unique, and we keep coming back to Tencent, but they have one of the several of the top games. They own the entire ecosystem of esports within their games. So where here, most of esports is observed and consumed through Twitch. In China, Tencent has 2 of the platforms that exclusively deal with their games. So they're the developers, they're the publishers, and they're the streaming platform to consume the content. The third difference I kind of alluded to already, but it's the strength of the competition. The streaming for esports is, again, here we have Twitch. In China, there's like 10 different streaming platforms. And if you guys care to look up what they are, some of those are like Panda TV, there's Zanqi, there's Douyu. These all do slightly different things. Many of them are more sophisticated than US market, where there's gambling, there's participation with the audience, there's tipping mechanics. So highly recommended. Maybe that's a sign of things to come in the US market. I think the second topic was about VR, and the truncated version of what we see in the VR market is some of you have heard this phrase, VR is PR, and it's a little bit unfair, but there's some truth to that. There hasn't been any landmark acquisition in the U.S. market outside of like Oculus by Facebook. In China, there hasn't been any landmark acquisitions. There hasn't been any significant commercial activity. You will hear buzzwords about Chinese arcades making money. In what we've seen, the Chinese arcades do make money, but it's not on the level that's going to really move the industry forward yet. These are going to be individualized, like 5-minute experiences that cost $2. So somebody will try it once and leave, kind of like a Dave & Buster's. But yeah, it's not quite to the point where we hope it's going to be in the next 4 to 5 years for those of us that develop VR.
Do you think they're going to be making acquisitions the Chinese companies will acquire overseas to enhance, the technology or even content for VR or even esports in China? Or do you think that that's going to be more their leaders and they are exporting their technology and content to the rest of the world?
Yes, but primarily in the mobile VR space. I think the higher end headsets is going to price you even more outside of the comfort zone. Mobile VR has seen a lot more traction in China. So if you have the right platform, and there's a number of developers that are actually Chinese that have successful games on Steam right now. If those generate significant interest, then maybe they'll have a Survios type thing where they'll get $50 million in funding from a Chinese company. It is a very hot buzzword, as you've alluded to, in the investment circle.
Okay. Anybody else have a
Jim
comment?
Yeah, so I'd say on the VR side, we've had a few conversations and potentially bringing folks from the U.S. over there. And I think similar to the U.S., it's gone up and down. So a year and a half ago, there was a lot of interest. There were a lot of investments being made. Certainly, all the big players were making 1 or 2 big investments, partially for PR standpoint. And I'd say potentially in China more so than here, there's been a crash in VR interest. I think because there was so much investment in so many startups. Not just, I think in the US, you have a lot of folks going into software, content development. On the hardware side, there are a couple of big players, whereas in China, there were a lot of folks who were jumping into hardware development, especially mobile VR. And I think a lot of those companies had essentially crashed and burned, right? So we're not seeing that much interest on the VR side, whereas on the esports, on the streaming side, definitely there's still a lot of interest. Like for companies that meet certain criteria, they are profitable. If their game is streamable or if it's an esports viable company, all of those will generate more interest than, let's say, your average gaming company.
I also think, even Tim Sweeney, the first talk yesterday, talked about it too. The Chinese, unlike the previous types of investment, what we've seen is that the Chinese sophisticated strategic investors, they're a little more patient with the money, so they actually don't expect return immediately. But the activity has slowed significantly. I'm kind of expecting if Magic Leap launches and becomes a huge success, you'll probably see another wave of VR investments, and that's domestic and international.
Yeah, from the information that I gathered, there are a lot of small studios in China developing VR games, but so far we haven't seen any large investments in this area. I think we probably need to wait a little. Like James mentioned that the VCPs, the strategic investors, they're more patient. They're looking at maybe 3 to 5 year investment time frame, but other game companies, they don't want to jump in until they see some near-term profits.
Yeah, I think it's going to be a while for VR in China, actually. And it seems that, with esports, that's really plowed a lot of life back into PC online gaming and also increasingly mobile gaming, but it's also fueled a lot of growth in the internet cafes. So there are about 150,000 internet cafes now in China, and the usage of them is increasing thanks to these 5 versus 5 environments. And because they are generating more revenue, some of the higher end iCafes and future chains that we've learned about, they have investment in sort of VR portions of their internet cafe, and there are also, HTC Vive cafes throughout China, and I think that's a shared usage of expensive equipment, but the trick is to lure the user to stay for a longer period of time than just 20 minutes. The people playing PC games at an internet cafe stay for hours or days on end, but for VR, I think seems to be still a missing section of what's going to entice those consumers to stay longer, so that it can look like there could be a big leap in revenue, and then the investment would probably follow there. And we're out of time, so I think that we were instructed to take some questions out in the hallway instead of taking up more time here on stage, but thank you all for listening.